Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the day has come. We are going to have CPI. CPI is a major event for the Forex traders. So my dear friends, please be careful during the news. Especially if you're a beginner, new trader, if you're in a very tight spot with a very little capital right now, then you should avoid the market. Try to close down all your US dollar positions during the news or right before the news, because market may show extreme volatility. Because of volatility, your stop loss may not work. Okay, so please be careful. You can see here this forexfactory.com. Apart from CPI, we also have major events or high impact news on GBP as well. So be careful with your GBP positions also. Now let's look at the chart of gold. So right now gold is standing at 1961. This is the current market price. And as we have already discussed, that gold is inside a symmetrical triangle pattern. Symmetrical triangle is a bilateral pattern. In triangle pattern, we basically have three triangles. Ascending triangle is a bullish pattern where we expect the market to go up. Descending triangle is a bearish pattern where we expect the market to go down. But in symmetrical triangle pattern, we can simply expect a breakout. We have no clarity regarding the direction because it's a bilateral pattern. So there is a obviously we know that there will be volatility, and the chart is also telling the same story, that it is getting prepared for a big breakout. So this is all about the chart of gold. We will be discussing about chart of gold, but let's look at the news here. Gold holds steady as US inflation data. Fed verdict loom. Gold was steady on Tuesday, although prices moved in a tight range as traders awaited US inflation data due later in the day, and the Federal Reserve's policy decision amid expectations of a pause in the central bank's rate hike trajectory. So mostly the market is expecting that Fed will be going for a pause in the rate hikes. So we have two possibilities. If Fed pauses the rate hike, then we have two possibilities. First of all, DXY will be going down and we will see a good upside on the chart of gold. This is the first possibility if they pause the rate hikes, and there's a high chance. And secondly, if they pause the rate hikes, then there's a high chance that market knows the thing very well. Market is already prepared for the news. So there's a high chance that after some big moves, market will show strong price rejection. In that case, you may get trapped. So be careful. Okay, so the first possibility is that after announcement of the pause in the rate hike, DXY will drop, gold will start flying. And on the second possibility is that right after the news, as market has already digested the news very well, there will be strong price rejection. Okay, these are the two possibilities of the chart of gold right now. And to be honest, I personally think that there may not be a trending market. Okay, if the news comes out just as expected, then there's a high chance that we may get to see some price rejection from below, and market may come down to this present range also. Let's wait and watch. So if you look at the chart of DXY, then we can see that DXY is already under pressure. Our previous level worked perfectly, and right now DXY is heading lower. So what are the chances before CPI? Listen to me carefully. Before CPI, I think that there will not be any big moves in the market, and more or less you will see market trading inside this range only. After CPI, if DXY drops, then we have the 200 moving average, and we also have 102.75 as the next support. These are the two support levels where market may show price rejection from below. On the other hand, we also have a support around 102.27. Why we're considering these levels? Let me show you. First of all, 102.27 is a FIBO 61.8% retracement level, and also previous resistance will be acting as support here. very strong level, but I don't think so market will be heading to 102.27 because market already knows about the news very well. Market may show price rejection from below. And if market has already digested the news as we are discussing right now, then market may also show price rejection from below around this level as well. And on the other hand, if DXY really wants to continue the upside, then it will have to cross 104.75. It will have to cross this level. Usually we don't see levels work nicely after a news because when fundamentals dominate the market, technicals usually fail. But still, there's a possibility of a price rejection. That's why we have discussed. But still be careful, the levels may not go. Okay. And it's the 4 hour chart of gold in front of us. On the 4 hour chart, you can easily see that we hardly have any trading opportunities. Okay, because in this present situation, the only trading opportunity is if market breaks this level, you can go for a buy, and if market breaks this level, you can go for a sell. But before news, taking a buy at breakout or taking a sell at breakdown is very risky, so obviously you should avoid right now. But on lower time frames, we do have some trading opportunities. Okay, so first of all, the strong level of 1973. The strong level of 1973 is still very much present before CPI. Yes, listen to me carefully. Before CPI, if you see gold going up, observe the market around 1973, 1972 level. 1970 to 1973 is a resistance before CPI only. Before CPI, you can expect the sellers to reverse the market. But after CPI, if gold starts flying, then obviously the sellers present around this area will not have the capacity to reverse the market. So before CPI, if market reverses, you can go for a sell around 1972, 1973 level. And on the other hand, before CPI, you can also expect some sort of resistance around the trend line at the top here. You can see here I have drawn a trend line. So around 1964-65, you can expect a minor resistance before the news. But am I confident? No, I'm not confident. Personally, I will avoid any trade around these trend lines. But still, you deserve to know. So that's why I'm sharing that if market reverses, if you see strong price rejection from above, you can consider a sell. But personally, I'll suggest that you should obviously avoid any position around this area. But on the other hand, if market hits this level by European session around 1966 to 67, if you see market is showing price rejection from above, then also you can consider a sell. But keep in mind, price rejection from above is very important on 1 hour time frame, 15 minutes time frame, on any time frame. But yes, confirmation is extremely important, and these levels are only valid before news only, not after news. And do we have any strong support? We do have strong support levels, but they are far away. We have already discussed on Saturday, that is, the first support is around 1938 and the second support is around 1932. These are the two strong support levels where we can expect the buyers to be present, as these levels are far away, not immediate support levels. So if there's a fall right after the news, we can expect these levels to work as well. Usually, I always say that do not trade on levels after news. Try to follow the trend of the market. But today, I don't know why I'm feeling that there is a chance that the levels will work because of some price rejection. So that's why I mentioned about the support of 1938-32. So if market shows some price rejection from below, if you see market is taking support, you can consider a buy as well. But be careful during the news, because after all, market will be volatile. Please be careful with your all the dollar position. Do not gamble with your hard-earned money. We are traders, not gamblers. Do not forget that, and follow proper risk management. My analysis can be wrong as well, so do not trade blindly. Do not gamble. Okay, so bye bye, take care, be careful with your positions.